Hello and welcome to marketing91.com. Ethics in finance requires knowing how to focus on monetary value as well as on values in respective actions. Ethics in finance is often overlooked because ethical issues in finance are often addressed as matters of law. Frequent economic meltdowns, which could not be explained by theories of business cycle alone, portray the importance of ethics in finance. Scope of ethics in finance. The fundamental principles that the financial services industry should instill include the following: not pursuing profit at the expense of ethics and reputation, portraying behavior that is marked by integrity, fair dealing, and acting in the best interests of the clients, commitment to and delivery of technical excellence, prioritizing good ethics over the instructions of clients wherever the two conflict, looking beyond the question of what is legal, and consistent application of positive ethical behavior across the industry. Unethical practices in financial services. Credit cards. Credit card frauds begin with either a theft of the physical card or the compromise of data associated with the account. Bank checks. A significant number of check frauds occur because of counterfeiting through desktop publishing and copying to create a duplicate or actual financial document. Mortgage. Mortgage fraud is the act of deceiving or intentionally distorting information on a mortgage application to be approved for a loan. It involves faking earning statements and assets to make the bank believe that the lender has more leverage than he actually has. Tax fraud. A tax fraud intentionally involves an intentional violation of one's legal duty to voluntarily file income tax returns and pay the accurate amount of income, employment, and excise taxes. Bankruptcy. Bankruptcy is a legal process which allows a business or individual to be discharged of all their debt obligations owing to their inability to repay. There are three methods of committing bankruptcy frauds: concealment of assets, multiple filings, and petition mills. Measures suggested to avoid unethical practices: monitoring checks, maintaining an employee's manual, annual review of financial statements, review of sensitive documents, safeguarding the payroll, checking employee references, and independent review. Ethical issues in finance management fall into two broad categories as listed below. Ethical obligations or duties of financial managers. This refers to the decisions made by the financial managers in fulfilling the finance function of a corporation and involves the fiduciary duties of the financial managers to a corporation and its shareholders. Shareholder control and wealth maximization. It is primarily the responsibility of the government to establish the laws of corporate governance. It concerns more theoretical matters about property rights and social welfare. Some laws are specifically designed to address the actions of finance managers. A finance manager who is aware of irregularities in his company with respect to the law may be held legally responsible for a crime. Many finance managers face the dilemma of acting ethically while satisfying the needs of the employer. The employer's final goal is to maximize earnings, and it may motivate an employee to act unethically. If the manager believes that his company may have crossed an ethical line, he should first report it to the employer. If he feels that the unethical events deserve legal involvement, he should do so without the fear of any adverse consequences. Let's understand the term whistleblower. A whistleblower is a person who exposes any kind of illegal, unethical, or inappropriate information or activity within a private or public organization. The information of alleged wrongdoing can be categorized as violation of company policy, rules, law or regulation, threat to public interest or national security, fraud, corruption, and so on. Whistleblowers may choose to bring to notice information or allegations internally or externally. Internally, a whistleblower can notify other people within the organization about wrongdoings. Externally, a whistleblower can expose wrongdoings by contacting a third party outside his or her organization. Whistleblowers can reach out to the media, government, law enforcement authorities, or those who are concerned. Types of whistleblowing. Internal. When the whistleblower reports the wrongdoings to officials at a higher position in the organization, it is termed as internal whistleblowing. The usual subjects of internal whistleblowing are disloyalty, improper conduct, indiscipline, insubordination, disobedience, etc. External, when the wrongdoings are reported to people outside the organization, such as the media, public interest groups, or enforcement agencies, it is termed as external whistleblowing. Open, when the identity of the whistleblower is revealed, it is called open whistleblowing. And anonymous, when the identity of the whistleblower is concealed, it is known as anonymous whistleblowing. Whistleblowers Protection Act 2011 is an act of the Parliament of India. The act seeks to aid the investigation of alleged corruption and misuse of power by public servants. It also aims to protect anyone who exposes alleged wrongdoing in government bodies, projects, and offices. The wrongdoing may be in the form of fraud, corruption, or mismanagement. The Act, approved by the Cabinet of India, is part of a drive to eliminate corruption in the country's bureaucracy. It was passed by the Lok Sabha on December 27, 2011. The bill became an act when it was passed by the Rajya Sabha on February 21, 2014 and received the President's assent on May 9, 2014. Highlights of the bill. The bill seeks to protect whistleblowers, that is, those who make a public interest disclosure of an act of corruption, misuse of power, or criminal offense by a public servant. Any public servant or any other person, including a non-governmental organization, may make a disclosure of such wrongdoings to the Central or State Vigilance Commission. Every complaint must include the identity of the whistleblower. The Act mentions that the Vigilance Commission shall not disclose the identity of the whistleblower except to the head of the department if necessary. The bill penalizes any person who reveals the identity of the whistleblower. The bill suggests penalties for knowingly making false complaints. Case of whistleblowing in India. Satyendra Dubey, an IIT Kanpur graduate in his mid-30s, was supervising the construction of the Golden Quadrilateral project in the Koderma division of Jharkhand. He had built a reputation for being an honest and upright officer. He was promoted to project director and was likely to be posted there. He wrote to the National Highway Authority of India, NHAI, and to the Prime Minister's Office, PMO, describing the financial irregularities in the project. Dubey exposed the mishandling of funds by 3 of his engineers, which led to the suspension of the contractor. Dubey was shot dead on November 26, 2003. Ethics in accounting. Accounting ethics refers to the application of the standards of right and wrong to the accounting profession. Social and ethical accounting, auditing, and reporting, or SEAAR, is the process of defining, observing, and reporting measures of the ethical behavior and social impact of the organization in relation to its aims and those of its stakeholders. Fraud in financial statements. Financial statement fraud is the deliberate misrepresentation of the financial condition of an enterprise accomplished through the intentional misstatement or omission of amounts or disclosures in the financial statements in order to deceive financial statement users. The most common financial statement frauds include fabricated revenues, timing differences, inappropriate disclosure, undisclosed liabilities or expenses, related party transactions, and inappropriate asset valuations. Financial statement fraud may involve the senior and middle-level management of a corporation. Senior management may indulge in fraudulent cover-ups to beat earnings or revenue growth expectations of the stock market, comply with loan covenants, increase the amount of financing available from asset-based loans, etc. Financial statement frauds deteriorate the confidence of the capital markets as well as market participants. It may also result in bankruptcy or substantial economic losses for the company involved in the fraud. Financial statement fraud results in massive losses to shareholders and creditors, as well as emotional trauma to employees who lose their jobs and retirement funds. Example of unethical practices by auditors in Satyam scam. S. Gopalakrishnan and Srinivas Talluri are 2 former partners of PricewaterhouseCoopers or PwC who were found guilty among 10 others by the special CBI court in India's biggest corporate fraud, the Satyam scam. According to the president of ICAI, Talluri was held guilty for not complying with professional standards. ICAI has banned Srinivas Talluri from practicing accounting for life and imposed a huge financial penalty on him. Srinivas Vadlamani, the former CFO of Satyam, was also barred from attesting financial statements for life, in addition to be levied a fine of INR 5 lakh. Thank you.